So Singapore market actually lagged behind most of the developed, if not all the developed markets, really in the first 30 years. In the last 20 years, we virtually caught up, except perhaps in one area, which I will talk about it later on. There are three very significant global developments in commercial real estate that made a large difference. The first is the internationalization of real estate with increasing cross-border investment, really only from the late 90s. The second game-changing development is the move from a bricks and mortar business to become fully integrated with the financial markets. The third critical development is the establishment of an institutional market, or I should say institutional investment market for real estate. They were pretty much the same everywhere in the world, including Singapore, except that we were very small and we didn't have the same kind of scale. Commercial real estate began to be included as a strategic asset in institutional portfolios. And this was the beginning of the development of an institutional investment market for real estate, first in the US and then spread to the other developed countries. Now, in Singapore, the commercial real estate market was quite unsophisticated, not unlike those in the US and other parts of the world. The big difference was that Singapore didn't develop an institutional investment market, and because we just simply didn't have the domestic homegrown institutions to support that market. In the 60s, the government engaged a three-man UN team. I don't think any one of you knew that. And that was to help Singapore produce an urban renewal program. But there are two pieces of legislation that helped the urban renewal program. And that was the Land Acquisition Act and what commonly called the Control Act. The Control Premises is a mouthful, Special Act and so on, in 69. So you can see that between 67 and 69, the Urban Renewal Authority actually tendered out 3 years. The tendered out 46 sites for commercial development. That's the kind of quantum change you get. Singapore had a lot of constraints during this period. No institutional funding. There was a lack of capital and small scale. So what happened was that was all very local, and the industry started to transform and become globalized. First is the establishment of a institutional investment, which I mentioned before. They led to a lot of money from institution going to real estate. And the second reason is there has been huge, what I call organized savings. The likes of the GICs of this world and the pensions fund insurance company. In fact, according to a PwC report, by 2020, if you include all the institutional money, pensions fund, insurance company, and sovereign wealth funds, the AUM, the asset under management for real estate, for everything, will be about 100 trillion US. So when GIC started in the 1980s, there were very few competitors. But over time, we see even more competitors, but greater allocation by the institution to real estate. So to the surge in demand for cross-border investment, you also see professional service providers growing in response to this. So these professionals, whether they are bankers, fund managers, brokers, and so on, are actually the lubricant. They are the people that are used to help with the transactions that's going on. So just a little bit about GIC, since I was there for a pretty long time, and that in fact it is one of the pioneers in cross-border investing. So the journey it took since its formation in the early 80s pretty much reflects how the global arena has changed. So in the initial years, even though GIC's mandate was to invest outside the country, the focus, almost all the investments were in the US. being the most mature and deepest market. But it was only later on, a little bit in Europe, following that, and then only in the 90s where there was a refocus in Asia. And that was when, by the late 90s, I could call it become truly globalized. Now, another very unique feature of another unique Singaporean phenomenon is that the government assumes the role of promoting economic growth to our neighboring country by developing what was called the external wings. Now, Singapore, because of the globalization of real estate and because of the involvement that Singapore has had in cross-border investment, it also started to attract the influx of service providers. If you look at this list, we are in a strategic location, being an established financial market in the region, and it has a stable political environment and very reliable skill. We have HR, a pool of relevant talent, and experienced fund managers, and also tax concessions from the government to invite regional head office to be set up here. Okay, now I want to move from the bricks and mortar to capital market, which is the other things that transform the real estate market. So as I say, Singapore is also a beneficiary to the global trend in integrating bricks and mortar real estate with the capital markets from the 1990s. Until then, the buying and selling of physical assets were the only market practice, and it still is. But since then, innovations have allowed both the equity and debt components in the capital structure behind the bricks and mortar to be traded both in the public and private markets. So this gives rise to what is called the four-quadrant approach. You can see private equity, private debt, and public debt. The CMBS, just like the REITs, were innovative solution to alleviate problems associated with the massive build-up on non-performing loans caused during the SNL, the savings and loan crisis in the United States. Remember I talked about how that happened in the late 80s and early 90s. That was the case. And then following the collapse of that property market. So the CMBS grew very quickly from $5 billion to a peak in $230 billion. By the financial crisis, GFC, it collapsed. Now it's kind of steadily moving up. Now moving to private funds, which is also another thing that happened following the SNL crisis. And so the first batch was simply opportunity funds, right? They were there to buy plenty of distressed real estates. But since then, the real estate PE or private equity industry continued to innovate and grew globally. It grew very quickly, as you can see, the PE funds. But again, the GFC stopped that growth trend, and quite a lot of funds, in fact, were found wanting during the GFC. It was very easy to invest and show performance when the market is rising, but when the market falls, you really could tell who are the ones that are good enough to stay on. A unique feature in the development of the Singapore real estate market is the active involvement of the government. The circumstances in which Singapore was born in 1965 perhaps precipitated the need for the government to actively steer the economic development of a very new nation. And much of this involves the use of land, right? So, as you have a situation that the government, all of these, right? They are the provider of the infrastructure, soft and hard, policymaker, regulator, landowner, the largest landowner in Singapore, and a developer, in fact, the largest builder of housing. The first 3 points are not unique to Singapore. The last two are very different from other developments in other cities as a supplier of land for development purposes, as in the URA sales of site, and HDB provides housing for 80% of the population. So that's a big difference, right? However, I just want to make the point, this public-private partnership, we didn't call it then at the time, has worked well for Singapore. It is in fact an important success factor, combining pragmatic policies with the public sector's efficiency and competence in implementing policies with the entrepreneurship of the private sector, to bringing the market knowledge, their private sector business doing skills, capital, and a willingness to take risk. So globalization obviously will continue to spread to more countries despite Mr. Trump. So with more funds allocated to real estate, as I was saying earlier on, competition will increase. In fact, compared to when I started with GIC, competition has become very stiff, even stiffer now. Continued strong institution allocation to real estate. So as more funds are accumulated by all these institutions, more will be allocated to real estate, both in percentage term as well in absolute term, in the foreseeable future. So real estate is expected to see continued strong allocation in the medium term, and competition for investment will remain tough. Over the longer term, however, allocation will depend on the amount of accumulated savings available for investment. The strong growth in investable funds that we've seen over the last 20 years may not necessarily continue, because more fundings have to go to an aging population, as we keep hearing from our government too in Singapore, right? There will be greater need for funding healthcare. People are living longer, and the low returns from bonds. What I want to do now is to move and look at some of the big trends, right? The first one is obvious, is technology. Much has been said and written about technology, about the disruptive technologies and the sharing economy. In fact, many of you young people here probably know more about this than me, right? But I would just like to highlight a few things which is worth thinking about. Firstly, this is only the beginning. I think we are going to see a huge change, even more disruption on the way we live, work, and play. The second thing is, technology is changing fast, so real estate business needs to adapt quickly, and we have to think about building. If you're doing development, new developments, you think about building for the future. If you are repositioning your existing asset, you also have to think of how you're going to meet the future. How can you be ready for the future? I think the third point I wanted to make is that going forward, the possession of data is more important than the hardware. I think in general, mostly you can buy hardware, and to some extent the software that drives the hardware. But the possession of proprietary data is yours. It's going to make a difference to your business, to your competitive prowess. So the use of the data, how you collect the data, you use to analyze and apply them, is what's going to make a difference going forward. Let me move to urbanization. And what is important here is, whereas urbanization put pressure on the urban fabric, it also creates a lot of opportunities. There's huge demand for all sorts of real estate. And that's the opportunity. You see that happening in a lot of emerging markets. Urbanization also comes with expanding middle class in a growing economy, which is the next point. Now, this is important because you can have people but no money. That's not much going to do much for you. If you have a growing middle class with increasing purchasing power like we have seen, it makes a huge difference to the demand, to their demand and meeting their demand through the real estate sector. Changing demographics, yes, I only want to focus on two groups. One is the aging population, which I've talked about, which I won't spend too much time on. What happened here is that when you have labor scarcity, it has a tendency to push up inflation. And inflation is bad for investment, generally speaking. One of the reasons why we're doing so well on the investment front is because inflation has been low, interest rates have been low, right? The other group, which is very important, are many of the people here, that, and the majority are millennials. Millennials in many countries are the largest generation, and they are growing. Millennials will account for about 27% of the global population by 2020. Climate change, I won't talk much, a lot has been talked about this already. So green building, green technology or green building will be seen not from expenditure perspective, which has been the case. Oh, we're going to spend money to upgrade and become green. It will be seen from a revenue generating perspective, and that makes a huge difference. Showing that all these trends and macro factors are all coming together in the next 20 or 30 years. So they are, in fact, in some extent, you can say they are converging. So you are not dealing in one trend or one macro factor at a time. The change is going to be, the magnitude of the change is likely to be very big, and we better be ready for the future. The Singapore market has come a long way to get to where we are today, whether through design or good fortune. The last 50 years has worked well for us, for Singapore. Looking ahead, there are many challenges, and I've point out a few. In fact, we are moving into a brave new world that few of us really know what it is. Most of us are just speculating. So all we know is the next 50 years are going to be very different, and the formula that worked for us in the past 50 years will probably, or maybe quite definitely, not going to work. Thank you very much.